Good morning, listeners. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 21st September 2020. In the international market, investors have started to fret that the US recovery is stalling again without an additional injection of fiscal stimulus funds into consumers' wallets from Congress. Investors remain watchful of household spending as consumption represents around 70% of US annual economic output. On the economic front, the US current account deficit soared to its highest level in nearly 12 years in the second quarter as the COVID-19 pandemic weighed on the exports of goods and services. With potential stimulus package ahead of US elections, US 10-year benchmark is now trading at 0.69 percentage points and 30-year benchmark at 1.45 percentage points. In UK, Britain's economy faces a triple whammy of rising COVID-19 cases, higher unemployment, and a possible new Brexit shock. With recent remarks of possible negative interest rates from Bank of England after a very recent rally, UK 10-year is trading at 0.16 percentage points. In the crude oil market, in recent OPEC Plus meeting, they assured the market with full compliance and urged legates to fully comply. With this strong message, crude was up and trading at $43.32 per barrel. We expect crude to trade in $43 to $45 range in the coming days. Very important information is China's crude import is falling again for the last 4 months and India is still recovering from COVID-19 shock. Hence, Asian crude oil demand is down by 8 to 10% from August, and we do not expect a very sharp recovery in demand anytime soon. In the currency market, DXY or dollar index is at 92.83 and has found some interim bottom at these levels. On Friday, USD INR closed at 73.48 and 73 with a 73.14 low. It was widely anticipated that the rupee came off its high against the dollar on Friday as some state-owned banks bought the greenback, likely for the Reserve Bank of India. Hence, we are seeing RBI intervention at around 73.15 levels. USD INR expected to trade today in 73.40 to 73.75 range. Exit intraday trading range will be available only once the market opens. In the domestic market, Friday's GSEC auctions brought no relief, but there was no devolvement at all. 522 GS 2025 cutoff was at 544 percentage points and 619 2034 cutoff was at 638. 577 GS 2030 closed at 6.01, above 6% psychological mark. Markets will be very much range bound for this week until the H2 borrowing calendar comes. We will be shortly doing a coverage of borrowing calendar for our subscribers. Today's 577 GS 2030 intraday trading range is 599 to 604. Advice of the week: square off all your trading positions, AFS, HFT positions, as much as you can, as fast as you can. Odds are not in favor of lower yields. Better to stay away and come in the market after the H2 borrowing clarity emerges. We at Knight Research see a strong support at 6.26 percentage points for benchmark, above which the stop losses will trigger quickly and can take the yields very high before the RBI intervention comes. And that might be the good entry point to take fresh positions. For your intraday trading ranges once the market opens, you can reach out to us on 9930307466 or at research@knightfintech.com.